Hey everyone, welcome back to Corporate Decoder. 40 just filed its annual report for 2025, and there is a massive dividend payout and some big shifts in their business to unpack. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report shows Formula Systems is distributing a huge chunk of cash to shareholders, but also highlights some significant changes in their business structure and risk profile. Formula Systems, or 40 as it is known on the Nasdaq, is a global information technology group. They're involved in software services, providing their own software solutions, marketing and supporting software products, and even computer infrastructure. Basically, they're a big player in the IT world, especially in Israel, but with a growing international presence. Let's dive into the numbers for the year ending the 31st of December 2025. Formula Systems saw its revenues jump by about 18.4%, reaching $2.63 billion, up from $2.22 billion in 2024. This growth was driven mainly by their software services, which climbed almost 19%, while their proprietary software product sales saw a more modest increase of over 12%. A huge part of this success comes from their subsidiary Matrix. It limited Matrix's revenues increased by about 12.1% in their local currency, the Israeli new shekel, reaching nearly $1.76 billion in 2025. This growth was fueled by strong performance in their IT solutions and services in Israel and their cloud and infrastructure businesses. They even had organic revenue growth of over 7% when you exclude the impact of recently acquired companies. Another key player is Magic Software Enterprises Limited. Even though it merged with Matrix in February 2026, its standalone performance in 2025 was strong. Its revenues grew by over 15%, hitting $543.6 million, thanks to high demand for its professional services, especially from the financial, high-tech, healthcare, and defense sectors. Looking at the consolidated picture, while revenues are up, the overall picture for profit is a bit mixed because of a massive gain from selling a part of their business. Their gross profit went from $445.7 million in 2024 to $519.1 million in 2025. That is a nice jump. However, their selling, marketing, general, and administrative expenses also rose significantly, from $249.7 million to $311.9 million. This means their operating income, which is the profit from their core business operations, actually went down slightly as a percentage of revenue, from 8.26% in 2024 to 7.47% in 2025. Now, here is where things get really interesting. The biggest story in their financials for 2025 is the sale of their stake in Sapiens International Corporation NV. This sale resulted in a massive gain of nearly $578.3 million. Because of this, their net income from discontinued operations soared to $559.4 million, making their total net income a stunning $669 million for 2025, a huge leap from $193.7 million in 2024. Keep in mind, this gain is from selling off a portion of their business, not from day-to-day operations. This massive gain from the Sapiens sale really boosted their equity. Total equity attributable to Formula Systems shareholders went from $679.3 million at the end of 2024 to over $1.36 billion by the end of 2025. Formula Systems is also planning a significant cash return to investors. They've announced their intention to declare a special cash dividend of up to $200 million to shareholders, based on their 2025 results and the Sapiens sale. Matrix, another subsidiary, also declared substantial dividends. Matrix itself seems to be doing quite well operationally. Matrix's revenues increased by about 12.1% in Israeli currency in 2025, and their cost of revenues as a percentage of revenue remained stable, around 85%. This shows a solid ability to manage costs even as they grow. Now, like any company, Formula Systems faces risks. They're heavily involved in mergers and acquisitions, and integrating these new companies can be tough and risky. They also highlight the risks of lengthy development and sales cycles, which can delay revenue. Of course, they're also exposed to broader economic issues like inflation, high interest rates, and currency fluctuations. They note that a 10% devaluation in foreign currencies, mainly the Israeli shekel, could impact their 2025 revenues by about $200 million. Beyond the business and economic risks, there are also risks related to their technology and intellectual property. They mention potential third-party infringement claims and the possibility of their own intellectual property not being adequately protected. Looking at leadership, Guy Bernstein continues as CEO and Asaf Berenstein as CFO. They've been with the company for a long time, and their compensation, especially Mr. Bernstein's variable compensation tied to net profit, is quite substantial. The report details their pay, with Mr. Bernstein's earnings reaching over $30 million in 2025, largely due to his annual bonus linked to net profit and some equity awards. This is a significant amount and shows how much the company is betting on its top brass. They also have an audit committee, and the report clarifies that Mr. Thomas Jacob is considered an audit committee financial expert, which is important for oversight. Shifting to the balance sheet, Formula Systems had total assets of over $3.58 billion at the end of 2025, a significant increase from $3.01 billion in 2024. This growth is largely due to the cash they received from the Sapiens sale. Their cash and cash equivalents jumped from $507.7 million to $1.28 billion. Their liabilities also increased, particularly current liabilities, but their equity grew even more dramatically, largely thanks to retained earnings, so their financial position looks solid after the Sapiens sale. The big takeaway here is the impact of the Sapiens divestiture. While the core business shows steady growth, the sale of Sapiens heavily influenced the 2025 net income, leading to a massive profit due to the capital gain. This sale significantly reshaped their financials. They employ a large workforce, over 19,000 people globally in 2025, with the majority in Israel. This highlights their operational scale. Looking at cash flow from operations, it increased from $324.5 million in 2024 to $382 million in 2025, which is a positive sign for their ongoing business. However, their financing activities show a significant outflow of cash, as they paid out substantial dividends to both Formula's shareholders and non-controlling interests in their subsidiaries. This is a clear signal they are returning capital to investors. On the investing side, the numbers are heavily skewed by the Sapiens sale, which brought in over $676 million. This inflow is partially offset by investments in new businesses, showing they are still active in growth and expansion. Formula Systems does have outstanding debentures, and they've had several issuances. These come with covenants, which are promises to maintain certain financial ratios and undertake certain actions, like not distributing excessive dividends without meeting specific equity and debt thresholds. These are common for companies with significant debt. Even with the Sapiens sale boosting the bottom line, their net income from continued operations actually decreased slightly from $122.1 million in 2024 to $109.5 million in 2025. This suggests that the core business faced some pressure, possibly from increased operating expenses or other factors detailed in the report. The auditors, Ziv Haft, gave an unqualified opinion on the financial statements, meaning they believe the financials are presented fairly. However, they did highlight effective control as a critical audit matter due to management's judgment in consolidation, indicating complex accounting judgments were made. Ultimately, Formula Systems 40 had a phenomenal year in terms of net income, largely due to the Sapiens sale, which also funded a huge special dividend. While their core operations show growth, the increase in expenses and the dip in net income from continued operations signal some headwinds that investors should watch. The company is clearly focused on returning value to shareholders and strategic growth through acquisitions, but the integration of these businesses and managing operational costs will be key going forward. That is my take. Stay decoded. If you found this useful, hit like and subscribe, and check out the Discord linked in the description for more.